Greetings, members, one and all of the Salivation Nation. Be ready. Gold and silver will shock us. Let's explore. Much like it did in 2021, I believe this year we're going to see gold and silver shock us. And what does that shock mean? Well, if you look at the performance of both metals through the last year, they were down. Silver, especially, down fairly dramatically. Neither metal essentially preserved our wealth in 2021. And there have been years like that in the past. But considering what all is going on in the world, many of us are frustrated and, yes, even shocked that they're not doing better. We have a little bit of a saving grace, though, for today, considering yesterday's losses, with a volatile market. And so far, it's already proving to be somewhat of a shock, where we're seeing movement bounce the way it has in the last couple of days, and at the end, for the last few days of 2021. Right now, the markets are up, with gold up $12.70, up 0.7%, and silver is up 0.68%, up 16 cents. Platinum group metals are also up as well. Very interesting to see. So what's happening here? Well, the bulls are proving resilient, at least today, from this article from Jim Wyckoff over at Kitco News. And they're up higher. U.S. dealings for Tuesday, bulls are enjoying the near-term technical advantage as prices have been trending higher recently, save for yesterday, and that is prompting mostly chart-based traders to step in to buy the recent dips. Bulls are also showing strength despite this week's sharply rising bond yields and a rally in the U.S. dollar index. February gold futures were last up $14.90 at $18.15. March COMEX silver was last up 26 cents at $23.07. And there were some smart buyers during that dip. I was not one of those smart buyers, even amidst some warnings from this community when I made a purchase of gold after it kind of spiked up slightly, but only lost out a few dollars as of now with where the markets are, but it would have been wise to wait. But no one really knows exactly what's going to happen in the markets, but nonetheless, there that is. Global stock markets were mostly firmer overnight. U.S. stock indexes are mixed at midday or near highs. Risk on is the mantra of most traders, investors early in the new year. This comes despite the Omicron variant, the coronavirus still spreading like wildfire in many countries. The U.S. reported over 1 million new cases on Monday, which is a global record. Ideas of stronger U.S. and global economic growth in 2022 and that coronavirus is serious but manageable are keeping marketplace attitudes mostly upbeat. And there isn't a greater risk, or there are more hospitalizations, but I think much of that is probably due to the lingering Delta variant. And of course, there's more people getting it, so there's going to be more people in hospitals. The key outside markets sees NYMEX crude oil futures up and trading around $77.25 a barrel. Typically, oil kind of falls in line with gold, or the opposite. The U.S. dollar index is even higher again today. So the U.S. dollar index is up and gold is up. And this is one of those cases typically where they're out of sync, out of phase. The yield on the 10-year Treasury note is presently fetching 1.67%. U.S. bond yields have been on the rise for 3 weeks and have taken a big jump this week. Don't be surprised to see renewed inflation concerns hit the marketplace in the near term and sap risk appetite, as bond yields are likely to continue to rise, and which means that they're working against each other. And that's going to mean that gold and silver could see some wild activity in the coming days or months. We'll see here. But let's refer to another piece over here from Saxo Markets. This is an interesting article that gold and silver may spring a 2022 surprise. Indeed. So this is a very interesting read. We'll see what they have to say here. Gold managed a small rally during the final days of 2021, thereby cutting the annual loss to around 3.6%. And while being the worst decline since 2015, it was actually a respectable year for the yellow metal. Not so much for silver, though, not least considering the headwinds from rising interest rates expectations in the dollar, which against a wide basket of currencies rose by 5%, now which was its best year since 2015. So go figure. But you think about that statement right there. Look at that shift. Think about that for a moment. This is a dollar bill that I'm holding in my hand. It's a crisp, uncirculated dollar bill that over the course of the last 30 days has probably lost about almost 1 cent in value. Not quite 1 cent, but almost 1 cent in value based off the latest reports about inflation. In 30 days, it lost that much, and it has had the best performance against the breadbasket of other currencies since 2015, whereas gold, it has lost 3.6%. You tell me which one is worth more. You tell me which one is the better value to have in your hand, especially as a wealth preservation tool over the course of time. Which one is doing better? A currency that is inflating at a rate of 7% in the last quarter here, or gold, which has lost 3.6% over a course of a year. But that year, and from where the numbers were over a year ago, was at its all-time high. That's just it. Numbers can really mean different things in how you interpret them. You can make numbers and statistics say whatever you want, but we know the deal with gold, and really with silver as well. But I think this is one reason why, folks, that even though silver, it takes a little bit more fortitude in order to hold it for a long period of time and time your buys, gold has really proven itself to be that ultimate store of value. But I'll move on here. Gold is often used by fund managers as a protection against the unexpected, whether it be macroeconomic or geopolitical developments. The wall of money provided by governments and central banks following the first wave of the COVID-19 outbreak helped reduce macroeconomic risk while setting the stock market sharply higher, resulting in what a colleague of the author says is a mind-boggling year for equities. That's actually a very good paragraph, and that's right, because gold is a protection against the unexpected. And in a sense, even though there has been all this quantitative easing, well, the expected result, at least in the short term, is there, providing people to have sort of a lackadaisical attitude towards gold, especially with ETFs, and that's what we're looking at here, because paper gold and how it's traded, that is a measure of what the activity is in those markets. The physical markets and the trading thereof is somewhat separate. Responding to these developments, total holdings in exchange-traded funds backed by bullion saw a steady decline throughout the year as investors, including some of the largest real money asset managers, cut their holdings by 287 tons, thereby reversing parts of the 750 tons that was added in 2020 during the first year of the pandemic. That could reverse again, hence surprising us and hence shocking us. And here we can see the precious and platinum group metals performance over the course of the last 5 years. And indeed, responding to these developments, total holdings in exchange-traded funds backed by bullion saw a steady decline throughout the year as investors, including some of the largest real money asset managers, cut their holdings by 287 tons, the most since 2013, and thereby reversing parts of the pandemic says. That's a repeat of the paragraph above, with that, other than the part about 2013. During the first days of trading in 2022, gold has, after reaching 6 weeks high, have returned to its established comfort zone close to $1,800 per ounce. This is the biggest decline in 6 weeks and was triggered by surging bond yields as investors brace themselves for monetary policy tightening in 2022. That's part of the baking in of the markets. The weakness has been driven by a sharp turnaround across some of the other metals, not least platinum, which at one point on Monday slumped more than $50, thereby seeing its discount to gold rise to a 13-month high above $870 per ounce. That is good analysis there. The first couple of weeks of the new year often fails to deliver much in terms of directional inspiration and clues as to what happens next. And until that picture becomes clear with regards to the direction of the dollar, the timing and the pace of Fed rate hikes, gold may struggle for direction. In fact, some say that first rate hike might not happen until May. Key to the ultimate direction hinges, as mentioned, on the direction of the dollar, and not the least how high real yields can go. They believe at Saxo Markets that 2022 could offer a rough ride for global stocks as interest rates rise and consumers keep more money in their pockets following a wild year of strong consumer spending. So here we see gold with the real 10-year real yields and how they move so much in tandem with each other. But you can see here, starting in 2021, mid part of the year, they've separated a bit. Pretty crazy. Gold is not reacting. It's not being lifted up by these yields there, going to up there. So we'll see. Very interesting. So we need to watch what the FOMC does, Federal Open Market Committee, and not what it says, as that will create real impact, which could shock us one way or the other. Investors getting the Fed actions and after that direction, the Chinese economy right in 2022 are likely to be the ones realizing the biggest profits on their investments. We do not believe U.S. real yields can rise to the extent that others are forecasting. Now, with that in mind, and given the prospects for U.S. stocks coming off the boil, we believe that gold, as well as silver and platinum, will offer positive return in 2022, with the yellow metal once again showing its credentials as an investment that over time improves returns while reducing risk and overall volatility in a portfolio. That, my friends, I don't consider an investment. That is a hedge. That is a way to protect yourself from these uncertain times. A recovering gold price is likely to result in an even stronger performance in silver. I do agree with that. And potentially also platinum. I do agree with that too. Both metals will enjoy the tailwind from increased focus on the evolving green energy transition, with platinum demand apart from recovering automotive industry coming from the production of hydrogen and silver from solar panels and other electrical appliances. Here's another way that these metals could shock us, especially with silver, especially understanding that the prices are low. If they can acquire as much of it in the raw form with the least amount of premium, they'd be wise to take advantage of these low prices, which means that their investment in these metals and for their products and purchase of them mean that it's going to essentially make the price go up. Even though the supply chain issues are there, if they can get it, find a way to source it, or at least secure purchasing it, even without taking delivery of it, in order to make goods and services in both technology, medical, and biomedical, and industrial applications, that could be bullish for silver in a way that could really shock and surprise us. So I believe the shock will mostly be positive this year. As to what that will be, as to what my prediction will be for 2022, still need to think on it, but I am thinking on it, and I'm leaning bullish. You'd think I'd have learned my lesson from last year, right? Well, you have more to come when I do those two videos, one for gold and one for silver. Probably coming sooner than they did last year. We'll see. But nonetheless, we'll see how the news breaks, see how it is. But right now, it's interesting and to see these metals take a move in a positive direction. But whenever the pace is going to be, we're still trying to figure out. The market itself is trying to find its pace for 2022. The metals are showing that with volatility in their movement in price. And, right now I'm still behind in the purchase I made. But the psychological level of it is that, hey, you buy it, you own what you buy. You got to own your mistake and own your timing, whether it be good, whether it be bad. Salivate's law was in effect, and it hit hard, and it's still hitting hard, but it's a little bit easier when the prices are moving up. But I digress. So there you have it. Let me know what your thoughts are in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch. And very important, please rate this video. Please thumb it up. It helps the algorithm. And if you share it, that'll help even more. And if you put a comment below, let me know. If you came this far in this video, say shock in all capital letters as part of your comment so that I know you watched to the end. And then after all of that, if you haven't done so already, please subscribe.